On Friday night, I told you about how the solar stocks had bottomed, especially Enphase Energy, which reported a hideous quarter last week, only to see its stock soar. Now, see, that is a classic sign that the industry is getting ready to recover. Remember, residential solar is totally hostage to financing costs because hardly anyone pays for these systems up front. So as long as you see rates headed lower, the best stocks in this group are going to be winners. The stuff's really expensive to buy all at once. That got me thinking, though, about the entire solar space, including the steadier commercial side of the industry, which brings me to a new name that I've been hearing a lot about in recent weeks, and it's called Nextracker, and capital NEXT. A company that makes utility-scale solar tracker and software solutions for massive projects. It's all over the world. This thing came public just over a year ago at $24 and ended up being among the best-performing IPOs of 2023, climbing to $46.85 by the end of the year. And Nextracker hasn't slowed down at all in 2024, climbing to $58 and change as of today. Although most of that move did come on February 1, when the stock jumped 25% in response to a blowout quarter. When I saw that run, I started doing some digging on this one, and you know what? I liked what I saw. Here's the basic idea. Nextracker makes solar tracker systems that allow huge utility-scale rows of solar panels to rotate and follow the sun's movement across the sky. And that maximizes the power generation. I know niche, but niche is good because you know what? It's not always sunny in Philadelphia or anywhere else. The original innovation was a single-row tracker technology that allows each row of panels to move independently, rather than all in unison. While this was once considered too expensive, Nextracker has been able to lower its input pricing to the point where they're now much more competitive. In fact, between the improved energy generation and lower installation operating costs, their tracker systems can actually lower costs over the life of one of these massive solar fields. Over the years, Nextracker's added additional features, self-powering systems, technologies that help improve the energy yield on uneven terrain or bad weather conditions, and equipment that protects solar panels during hailstorms, which can wreck these expensive panels. True, I know, again, boutique, but real boutique. Nextracker's now the global market share leader in the space. In the U.S., they effectively got a duopoly with a second boutique, Array Technologies. Together, the two outfits control more than 80% of our market. This U.S. business accounts for roughly two-thirds of the company's revenue, and it should get a big boost from the so-called Inflation Reduction Act, which included domestic manufacturing credits for these solar trackers. According to Goldman Sachs, these credits could boost Nextracker's earnings per share by 20 to 50% in 2025 fiscal year. This is really coming together. As for the international market, okay, it's more competitive, but these guys have the manufacturing footprint to take share all over the world, especially in emerging markets near the equator. Talk about a place for solar, huh? But what really stands out to me is that Nextracker stock roared last year, a period where the vast bulk of solar stocks kept getting steamrolled. The move makes more sense when you look at the earnings. Ever since it came public over a year ago, Nextracker's delivered a series of strong quarters, with management repeatedly raising their full-year forecast. That's why the stock could hang in there for most of the year before catching fire the moment that long-term interest rates peaked in November. Once the calendar flipped in 2024, Nextracker's stock had its first big test. See, for the past 9 odd years, this company has been owned by another outfit called Flex, the big outsourced electronics manufacturer. Flex still owned a majority stake in the business, even after the IPO. At the beginning of this year, though, Flex distributed its remaining interest in Nextracker to its own shareholders, a process that can be absolutely brutal because many of the former parent company's investors, they went out. They want to sell. That was the case here, as Nextracker pulled back from $50 on the final day of 2023 to around $40 in mid-January. But that turned out to be a phenomenal buying opportunity. Phenomenal. After bottoming in mid-January, the stock made it back to around 45 by the time the company was set to report earnings after the close on January 31st. And then Nextracker delivered its best results since coming public. I mean, I'm talking about a monster revenue growth quarter, up 38% year over year, much higher than expected. On the earnings front, analysts only expected them to earn 49 cents per share, but Nextracker nearly doubled that and were making 96 cents per share. One of the biggest blowouts of the year. For the full year, they guided for $2.53 and $2.90 a share. Wall Street was looking for $1.89. Hey, by the way, in the last 9 months for the forecast for the 2024 fiscal year, it's increased by 87% at the midpoint. In short, these guys are having an incredible year. I mean, just a ton of demand for the merchandise. On the conference call, Nextracker CEO Dan Shugar, also known lovingly as Shug, explained that his excellent results were, quote, driven by exceptionally high deliveries in our U.S. business, growing 70% year over year. But he also called out the company's tremendous progress at expanding overseas. When management spoke about the future, they painted an incredibly optimistic picture. There are still some near-term headwinds, including some uncertainty related to trade proceedings, but these headwinds are overwhelmed by the industry's tailwinds. There's the Inflation Reduction Act benefits, the fact that solar economics are improving, and panel availability has now normalized after a few years of supply chain interruptions. There are other positives, too, like decreases in battery costs, which makes solar much more viable than almost every other form of energy. Because given the intermittent nature of sunshine as a power source, you need great storage technology to make it work. More important, Shugart points out that our country desperately needs more power generation capacity. Listen to this. I'm going to quote it. Over the last few years, however, energy usage has increased dramatically, driven by growth in data centers, electrification of appliances and transportation, and reindustrialization across the United States. At the same time, there's been a significant retirement of legacy power plants, end quote. The result, according to the Energy Information Administration, we're looking at a 5% annual increase in new power generation needs over just the next 5 years. Shugart believes a great deal of that will come from utility-scale solar projects. And those things need tracker systems, which will most likely come from either Nextracker or that one other competitor I mentioned. I got to tell you, I was kind of blown away by the story when I dug deep. I mean, maybe I love it. Of course, it feels like we're late to Nextracker, with the stock up more than 140% from the IPO in a little over a year. But look, when you consider the numbers, the stock's not expensive. It's trading just 22 times the midpoint of management's new full-year earnings forecast. Look, on the 2025 analyst estimates, it's only selling for 19 times earnings. Even after a huge run, this thing's still relatively cheap, especially considering its monster growth rate. I don't have many stocks like this. Let me give you the bottom line here. We're developing a short list of stocks you can use to dip out our toes back into solar, and I think the niche Nextracker is a great option, just great. So you got my blessing to scoop some up, buy, and then you'll get more aggressive. It gets knocked down on a market-wide pullback. Although Shug might be able to stop it from coming down, at least when it comes to Nextracker. Dead money's back in.